Welcome to Wealth Preservation Solutions. I'm Elizabeth DeLeo, Director of Family Offices. Kevin Ellman CFP and CEO of Wealth Preservation Solutions is here along virtual side of me, and we're going to be discussing some important topics that have come up during recent conversations with clients and partners alike. Hi, Kevin.
Morning, how are you?
I'm very well, thank you. I'm excited that we get to do this.
Yeah, too.
Yeah, I think our clients have got really used to seeing your weekly updates, your Monday updates, and so we have a chance to be able to share with them some of your thoughts here as well. So, Kevin, you're talking to clients all the time, right? Multiple clients a week, sometimes several in one day. And through conversations that you and I have had, we've definitely identified some trends in kind of what the buzz is right now. So, what is the number one question that you're hearing right now?
I would say over the last month, most people want to understand, why is the stock market doing so well when the economy doesn't appear like it's doing that well? And I've read a lot of different explanations. The one I think is the best is that we're experiencing a K-shaped recovery. So you've heard of the V-shaped recovery where things go down and come back up pretty quickly, the U-shape where it recovers slowly, the L where it doesn't recover at all.
Not the greatest letter.
So the latest letter is the K-shaped recovery. So the upper part of the K represents, say, the top half of the population, perhaps knowledge workers, people who are able to work from home, and people who are still employed. Those people are doing pretty well. They're almost back to normal. These people tend to be the ones who own stocks and perhaps own their own home. In fact, one of the statistics I learned recently was that the top 10% of the population owns about 80% of stocks in the stock market.
Oh, wow, that's a heavy weighting.
Yeah, so that group is experiencing a recovery and things are going fine for them. But unfortunately, there are many parts of the economy and many industries that are not doing well. Restaurants, hotels, airlines, cruise ships. These industries are not doing well, and the people who are employed in them or not employed are not doing so well.
Right.
So that seems to be a pretty good explanation why we have this split where the stock market is doing well and the economy not so much.
It makes sense, especially even just being able to visualize that opposite direction, right? And it's so harsh, really. They are going full speed ahead into opposite directions.
I think the other factor is that the stock market tends to be what we call a leading indicator. The stock market is not reacting so much to what's happening today, but thinking about what's going to happen in the future, 6 months or a year from today. So many investors are thinking about, well, what is 2021 going to look like?
Right.
And my particular view is that, we're having a health crisis and we're going to need a health solution to this crisis. So I think once we have a vaccine, I don't know if we'll ever have a cure, but certainly hopefully we'll have a vaccine. I think things are going to start to recover. People will go out to restaurants again. People will travel again. They'll get on planes. And I think the world will slowly get back to normal. I do believe in science. I think the smartest people on the planet are trying to find a vaccine. So I think it's going to happen. And I think next year is going to be a better year. So what that means is we're not hiding. We're not running. We're not going to take money off the table. We want to stay fully invested. We think we obviously experienced a tremendous recovery so far, and we think that next year is going to be even better. So we're going to stay invested and plan for the long term.
Makes sense. And, as we continue communicating with our clients, we'll continue revisiting this concept and make sure that everyone's aligned with their own individual goals, right? To make sure that however that relates to the economy or what's happening, that everyone's always comfortable. Would you agree?
Sure. We always have to keep an eye on what's happening today. And of course, we can adjust if conditions change. And the other big question that comes up is, how is the election going to affect the stock market and the economy?
Right.
I did a little bit of research, and it certainly appears that there have been periods of time where we've had a great stock market, great economy under both parties. So there doesn't seem to be that one party is definitely going to be better for the economy than the other. And the other factor I think is important is that the person in the White House has less of an effect on the overall economy than most people think. I mean, it's not 100%, it's not zero, maybe it's a 10% effect.
Right.
But I think the underlying economy is more significant and more longer lasting than one particular person.
And that
So,
just makes sense. It makes sense, that obviously this person will have some impact, right? To your point, it's not 0%,
right.
but it's a little bit relieving to hear that obviously, I shouldn't say obviously, because sometimes we state the obvious and it's not so obvious,
Exactly.
that one person, to your point, cannot have that great of an impact where all of a sudden we should start, stuffing our money under a mattress and peering out the window and hoping for the best.
But notwithstanding that, still, we do plan to sit down with everybody immediately after the election and assess, what does it look like today? And then we can make adjustments accordingly.
Sure, absolutely. So those were definitely two important questions. And most of the time I'm on the client meetings with you, so I too have heard those questions. And it's nice to hear your insight and see you while you're doing so. So this is a lot of good information to digest, but is there anything that we should do right now?
So I'm not sure that we should take any significant action right now. I would say the one thing that we've been doing differently, we've had a large exposure to value stocks over the past years, and over the years that's done pretty well for us. Right now, that sector is not doing well. And then, of course, the technology sector has been driving the economy this year more than any other. So we have been gradually shifting away from value towards growth in general and tech in particular. So we are making those adjustments in our portfolios.
Okay, that's great. Is there anything else that you'd like to share with everyone before we sign off and tell them that we'll see you next month?
I think that's it for this month, and we'll come back next month.
All right, that sounds great. Well, thank you to everyone who took the time to listen in and watch us. We hope everyone is doing well. From our family to yours, stay happy, stay healthy, and stay wealthy. Bye.
For your free copy of Kevin's book, The 7 Biggest Money Mistakes People Make and How to Avoid Them, just text WEALTH to 88799.